What if I told you you could get a copy of the Edgefinder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edgefinder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edgefinder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, everybody. Welcome back to another stream. Thanks for being here, and happy Tuesday to you. So markets are higher here again today. We've got a continuation. We've had actually one of the better streaks that we've had in the stock market in the last 9 days, I think. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I mean, really, let's call it 11 days of pretty much only seeing upside, one directional moves here to the upside in Nasdaq, S&P 500, etc. It's been an interesting one this week because I've seen a lot of really upset messages, and I use this as an indicator. I'm not trying to like tease people that are of this thinking, but I've seen like a lot of really angry messages about this market right now. The basic line of thinking is, how can it possibly be the case that the Strait of Hormuz is less open than ever, now blockaded by the US and by Iran, and yet the stock market is finding a way to rip higher and is in an unbelievable fashion. The Nasdaq especially, I mean, has really ripped. It's only 2.7% away from the all-time high, right? So every time we have one of these circumstances, I mean, S&P 500 is 1.5%. I saw somebody make a post today that the S&P 500 is green on the year. Believe it or not. Just goes to show the resiliency here of U.S. companies. Look at this. S&P 500 is up almost 1% for the year. So if you bought on the first trading day of the year and held till right now, you're like, well, I've seen a ghost. But it wasn't real, right? That's kind of what it feels like. But when we have these sorts of events, I've done this YouTube thing for a while, like where I talk about financial markets. I share my opinion every single day. Sometimes I'm right, sometimes I'm wrong. But one thing I have learned over time is that humility in markets is not just being a nice guy or doing the right thing. It's actually self-defense. Like if you trade the markets and you don't have humility with your opinions, directional biases, etc., you end up being that guy who comments on every single one of my videos about how rigged the market, how rigged the market is, how stupid this is, everything is manipulated. How can this possibly be the case? You know, the Strait of Hormuz, this, the depression, that, inflation, this. You end up being that person. And unfortunately, I'm not naming names here because there's actually multiple people that are doing this across social media on my channel, but across everyone's social media, The problem is when you turn into that person, what you're actually just not saying out loud is that you've lost a lot of money because you refuse to acknowledge when the market disagrees with what you think. And the humility that comes with that is something that takes time to learn. It is not easy to acknowledge that, hey, maybe I was wrong. And I'm not saying that there can't be some kind of fall apart in negotiations that truly leads to sharply higher oil prices, problems. Like, hear me out. I am not saying that I knew the whole time the market was going to rally and that these people are idiots. That's not what I'm saying. I'm saying you had an opinion, the market went against you, and now you're bitter about it. That is a bad, bad, bad recipe. As opposed to, let's say I had the idea to go short. Let's just say at this level, I said, hey, I think this is a good time to pick up a short position. And then negotiations, look like they're on, etc. Both sides seem to be acknowledging each other. And I just say, hey, I'm wrong. Instead of being the guy who is bitter and losing a bunch of money right now, holding on desperately to, puts or short the market right now, which again, I'm not trying to make fun of that person right now. I'm not trying to like put my thumb in the wound. I'm just pointing out, like, don't be that person for your own good. Okay. It's really, really dangerous to be that person. The market's going to tell you you're wrong sometimes, and you have to move with it. Now, you might say, well, I ultimately do think that this market's going to roll over. Perfectly fine. That's not necessarily what we're going at. You may think the market's going to come up for a double top, and then we're going to have some frustration during midterm elections this year, and the stock market's going to have a bad second half. Okay, that's a thesis. But what are you going to do if you are wrong? What are you going to do if you're right? What are you going to do if you're wrong? That's what you always need to ask yourself. So many traders only ever look at things and say, well, what am I going to do if I'm right? How much money am I going to make when I'm right about this? Right? Whereas intelligence in trading, wisdom from painful learned lessons comes from understanding that you can at any point be proven wrong by the markets. What are you going to do when that happens to you? Because it happens to every single one of us. So there's a little trading psychology out of the gates here today. The S&P 500, the Nasdaq, they continue to defy gravity here. And yeah, I'll say that I agree in the sense that it's a little bit confusing to me how the stock market is so positive, though it does still seem to be the case that it's not. Everything is not just about the Iranian conflict. If you want to get the stock market to roll over sharply, how much higher are oil prices going to go? That's the question you have to ask. The other question you have to ask is, well, are we just going to ignore the reality that corporate earnings growth has been forecasted to like rise and rise and rise? Like during this whole period of time, for those of you who keep up with this stuff, growth projections for corporate earnings in the United States, which by the way is the long-term best indicator, the most correlated thing to stock market returns, is the returns of the stocks, right? The actual earnings from companies, and they've been ratcheting higher. Expectations have ratcheted higher. So at some point, I think what happens is you still had some bad news. You still do have some uncertain news baked into all this. The market's not completely ignoring this. What it's saying is that it's kind of over it. It's shrugging it off and saying corporate earnings strong. Oil prices are staying level here, at least for now. Meanwhile, you have some decent growth in the jobs market. The jobs market worry has gone to the wayside here. We've talked about that a lot here if we go to our asset scorecard. Now, again, the jobs market could sour from here, but at least right now the market's like, hey, we had a really good jobs report. Unemployment rate remains anchored low. ADP, the private payroll, showed some promising statistics. Manufacturing PMIs, retail sales, consumer confidence. Like, we don't have a crashing economy. So at the end of the day, I think what the market is doing is it's saying, if we can just get through this thing, like at some point, if things get done and over with in Iran, the other side of this looks pretty good. You've got earnings growth coming in for the US. You've got an economy that seems to be holding up okay. The jobs market looks fine. Now, of course, there is a contingency here. If Iran and the U.S. do not de-escalate in any meaningful way, then yeah, you probably have problems. But the market is optimistic right now that something good is coming out in the next few weeks. We'll see. That's my best reading here on what's going on. We've got the producer price index number coming out in here in just a minute. And then here is another piece of news that I think many people are also missing. When things dismissed over the weekend, people got real up in arms, like real ready, braced for impact on the stock market falling. What people kind of missed is that the US and Iran have continued to speak. We heard from Donald Trump that we've heard this many times, but they want to make a deal. But he reiterated that they had some kind of constructive conversation yesterday. And then the U.S. and Iran are returning to the negotiation table this weekend. And so I think this is what the market, the smart players at the table, read through. They said they stopped negotiations, but not indefinitely, right? They're resuming them. And that's what I think the market is like hanging its hat on. It's like, okay, yeah, they didn't reach a negotiation, but then we had something that creeped in on Sunday night or Monday morning, which was that the Iranians were looking into doing something with their nuclear enrichment or their uranium enrichment programs or something like that. And the market's kind of like, okay, you guys are still talking. And so the market has kind of just found a way to rally. So again, you always have to ask the question, if you're going to get downside in the stock market, which is the default harder direction, it's harder for the stock market to go down than it goes up. The market goes up because corporate earnings tend to grow, populations grow, economies grow, et cetera. GDPs grow, and that is a boosting factor to the S&P 500. So it's harder to get the market to go down than it is to go up. And so when you look at this, right, that's the scenario is the market saying, all right, we're kind of shrugging this off. You have good earnings projections, a decent economy, jobs data. Yeah, we'll figure out Iran. That seems to be the narrative. And we'll see if it holds. Where will Kiwi dollar go? Well, thank you very much for the donation. I wish I could tell you with certainty. I cannot. No one ever can. But I can give you my take on it. If I take a look at Kiwi dollar here and I go over to Forex scorecard, first and foremost, I don't like the price action on it. If we pull up NZD USD, and we've got just a second to do this before we get to the producer price index numbers coming out here in just a sec. We are getting a bearish reading within Edgefinder, although technicals have flipped bullish. So I'd probably be on pause on this one. If we had seen a little bit more failure here, I'd maybe be a little bit more interested. If you're longer term in nature, you do have kind of a level that we are looking at around the 61.8% retracement. Though personally, if I'm being completely honest, I really don't love this trade. From a technical basis, I would have liked to see this level hold for sellers. And if that had happened, then yeah, I think there would be, a good technical breakdown to the downside kind of move. But this candle looks really strong. And so for me personally, I would not be surprised if Kiwi dollar makes a move on up to 59.50. In the meantime, it looks like it's trying to shoot to that next zone. But again, for me, there would be no trade here because there's not enough confluence of things for me to take that trade, right? Technicals kind of going against my fundamentals here would leave me on the sidelines. Guys, we've got in regards to news here. I know I have a lot of chart requests. I will try and get to them as fast as possible. Thank you very much, by the way, again for the $1.99 donation. All donations, as we always say, go straight to the coffee fund at the office. We do drink a lot of coffee. Let me see if I go economic calendar. So we have the producer price index number dropping here in the next 10 seconds or so. Let's see if this gives us anything of substance. We'll react to the charts here. I'm just going to flip over here, see what happens, see if there's any significant price movement. So far, dollar is soft into the print. We'll see if it continues. Nasdaq continues to push. S&P continues to push higher. Oil is lower. Silver, modestly higher. Nothing just yet. And it was lower than expected. So very nice. So we had the producer price index, the core PPI, came in at 3.8% compared to 4.2% expected. That is good inflation statistics for the stock market. Very nice. We needed that. And let's take a look here. Producer price index, food and energy. So that's still X. Let me look at year over year. There it is. 4% versus 4.6% expected. So this is a very nice inflation statistic. Came in lower than expected on all fronts here. Inflation cooler than expected. That is going to be welcome news by the market. Now, granted, we were running up into the print, right? So the stock market was already up here this morning. So likely some of those gains had kind of been pulled forward. But look at this. That's going to be supportive evidence, I would say, to the bull case of the stock market. A big fear here with everything going on is that, the shock in oil price is going to keep the stock market, or inflation pressures on. But we've seen something kind of changing in the oil market. We've seen at least the price reactions. Look at this. Price reactions to some of the geopolitical news have definitely calmed down a little bit. Like, look over the weekend. That was a very modest up 8%. I know that's a big move, but let's be completely fair. That's nothing compared to when we're seeing 20%, 25%, 30% moves in a day or two on oil. Things are cooling off here in regards to the market's reaction to the Strait of Hormuz stuff. We'll see if that pattern holds. But that also kind of coincides with the volatility index continuing to move lower. I sold a lot of puts on stuff here this week, or this past week, which is looking good. I think I'm going to take some profits today on stuff. Notably, a lot of the software stocks that I sold puts on. IGV had a really remarkable bounce yesterday, and look at that, following through, up 1.17% today. We will take that. But yes, this continues, in my view, to support the rally here for S&P 500. I would like a pullback, but hey, you might not get it. So we'll have to see. Hey, just real quick plug, and then we'll bring in Chris Pulver. I mentioned the asset scorecard here and the Forex scorecard from the Edgefinder. It helps me to screen macroeconomic data as well as institutional activity tools. We can track what the crowd sentiment is doing, technical bias on a seasonality trend basis. We also added, if you're an Edgefinder user, added some tool tips here. We've been adding these throughout the Edgefinder, but this will help you to better understand what you're looking at here. So if you want to ever just hover over and get a little description as to how Edgefinder is scoring these things, how it is understanding, inflation bias, etc., then you can do so if you have a copy. If you don't have a copy, now is a great chance to get one. It is currently our 40% off discount that we're doing right now for our 4-year anniversary since launching the product to the public. About 5 years ago, I was looking at macroeconomic data like crazy, and I was like, this is my core component to how I trade the markets, but I really want a tool that will monitor all of it and give me kind of a summarized output. Basically, this brings me a summary for me to look at each morning on all of my favorite charts. It tracks currencies, commodities, indices, even Bitcoin. So if you don't have a copy and you're interested, chat with our support team. Use the link that's just been dropped in the live stream chat. If you speak to someone from our team, what they can do is they can set you up with a payment plan, or for a limited time during the live stream today, they can get you an extra 5% off if you message in, let them know you're watching, and they can get you that 45% off discount on Edgefinder. So don't miss our sale. It is the biggest discount that we do all year long, is that 45% off discount during the live streams. So take advantage. With that said, we'll bring in Chris Pulver to the conversation, see what he has to say about everything going on here in this market. Hey, Chris, how's it going, man?
Good morning. What's happening?
Not a whole lot. Chris, is this rally getting too overdone to the upside? Are we going to just shoot straight through the all-time highs? What do you think?
I think we're certainly trying to get to all-time highs. From the candle count perspective, I think we're due for a pause. I mean, this is, I think, 9 of 10 days or 10 of 11 days after yesterday's little thrust. So I would expect a little bit of a pause. 6,900 seems decent. If I'm pulling up some gamma levels this morning, this is pre-market. There's a pretty stiff resistance zone around the 6,900 barrier. The hard part, Nick, is, man, we are only seeing like plus or minus like 20 and 30 point moves on the day. It is a lot different than literally a week ago where it's like plus 50, plus 60. It's very nice to sell premium pretty far out of the money. And now it's making me decide, like, do I really want to go just like 30 points out of the money to sell a bear call spread? And yesterday, I was on the put side only, which was fortunate. I've not been happy with look, we're still at an 18 VIX. It was 20 yesterday. So what I was not liking as far as premium selling for 0 DTE is, even at a 20 VIX, that's expecting like an 85 point move on, like potentially like an extreme would be an 85 point move. And the plus minus on the day is, 50 points. So I've been very careful on, kind of picking and choosing my levels and making sure that if I'm going to sell premium, I need to get enough for it. And for example, if I did a $15 wide credit spread, that's a $1,500 risk. And it's like whatever I can pull in credit is fine. it was offering me like 50 cents yesterday, which is pathetic. It should be like $1.25, $1.50 on that. And I'm not going to force these trades when, I mean, the market is treating this like this is the vol crush. This is like, hey, the VIX went up to 20, now it's to 14. It's treating it the same way, where it's like we just went from 31 to 19. It's treating the volatility index like it's just getting smashed lower.
Yeah,
I think we want to go higher from here. News is looking good. Buying power is clearly in. When you and I talked last week, buying the dip around 6,600, I still think we can get there. There's a nice little inefficiency in that area. But the trade that I'm going to look at this morning is, I think 6,000 is a pretty safe level to play for maybe the next 30 to 60 days. I'm going to look at a little creative trade here, maybe a ratio spread, trying to pull in some premium. That gives me, a way to get, let's say that we reject here. We go all the way down to 6,300 again. Well, I want to go 6,000. So let me see how far out I can go. Let me look at the SPY right now. I mean, obviously it's not live market yet, but if I go out to the SPY, let's go to end of May and look at a 600. Not a ton of put premium, but I could probably build something that gives me $1.50 to $2 credit. Not bad for a little income trade out 45 days. That's kind of tasty 101 style, and that's pretty safe. There's a 92 to 93% chance of profit. Do you think that the VIX will just U-turn and head back into the 20s? Question for you.
That's a good question. When I look at the VIX, look at how similar it is here also on my screen to the dollar. Like, you've got these things moving in lockstep. It's like, obviously, very much the geopolitics stuff played a big role in helping the dollar to the upside, and now seems to be helping the dollar to the downside. When we look at the VIX, I mean, do I think an 18.25 VIX here is, a good price for it to trade at? I personally think volatility could be a little bit higher than where it currently sits, just given the idea that, we have pulled forward so much optimism in the last few days around, of course, what the market really was confused about yesterday. A lot of people commenting this, I talked about it a little bit earlier in the show, was how could you possibly be up on a day like this? And what I think kind of people looked through is they looked at the headline of, we didn't reach a negotiation, we ended the conversation on Sunday or Saturday or whatever. But it wasn't and we're not speaking to them, we refuse. It wasn't like an up in arms, like throw in the towel, we're never speaking to them. It was like, we're done talking for now. And now they're talking about talking again. So conversations are still happening, right? So there's like this, both sides are trying to posture as strong. You have, Trump doing the blockade outside of the Strait of Hormuz. And then meanwhile, you also have the Iranians. I saw some kind of a post where they were looking into what it would mean to take the nuclear side of the equation out for them and keep the Strait of Hormuz thing. So there's still, the point is, the market's like, okay, they're still negotiating, even behind, not necessarily so publicly, but there's conversations happening. And so this optimism is baked in. Now, I say that because there's a lot of optimism baked in the sense that if something does not materially improve in coming days or a week or two, you could very quickly see risk off come back into this market. It's just that right now, trying to fight this tape is difficult. And there's a couple other things here, Chris. I know the market also does this tendency where, it's really easy to get the market on the first go on something new and scary, but the market starts getting used to. It's like we saw this with the tariffs. We see this with the Fed chair wars. Like, everything kind of does this, where the initial shock causes the big move, but then it has diminishing effects on, making the chart go down.
Sure.
And so I think that the market's kind of shrugging this off and looking into, like, we're going to get past this at some point, but the economy seems to be holding up. Inflation was cooler than expected today. The jobs market showed some promise. Earnings forecasts for stocks in the S&P 500 are seeing really strong growth right now. And so I think there's some level of like, all right, we're bottoming on bad news, but really it's because we're looking at like earnings and the economy looks okay and seems to be able to hold up in the meantime. I'm saying this, I would love to see a dip. I'd love to see a pullback. I'm just trying to read into what the market's view on it, the narrative here seems to be.
Yeah, I think that earnings and focus this week with financials kicking off. Excel. I mean, everything had a pretty good thrust yesterday. There was a lot of green across the board. Mag 7 was also leading the way. Looking at pre-market today, I mean, so we have Goldman Sachs and JP Morgan. They've already announced earnings. That's two big investment banks. We have, I think, Wells Fargo and Bank of America out there as well. Wells Fargo might be, they were this morning as well. I don't love that they're down, $2 to $3 pre-market. Like, this is Wells Fargo here. But I mean, looking at the top and bottom line, like, okay, so Wells Fargo missed on revenue. JP Morgan beat top and bottom. Goldman Sachs beat top and bottom. I think the focus for HYG, look at how we've had a correction in the kind of the credit stress. So HYG is back up to where we started. LQD is back to where we started. So this has been, seemingly repaired a little bit. The market's clearly dragging it higher. I was really surprised to see us go this fast, this quickly on a 2-week ceasefire. So I think what the market is looking at is like, okay, this ceasefire is the start of negotiations. And I think what we're going to see on the headline news right now is mostly brinksmanship, which is Iran can say one thing that sounds like it's going to be deals breaking down. The US is going to say one thing that sounds like deals are breaking down. Did you trade through Brexit 2016?
I was watching markets at the time, but I was like a newbie trader at that time.
Okay. It wasn't 2016, you essentially had like the sell-off in June, a flash crash in October, and then you had 3 or 4 years of this type of back and forth. Like, Brexit was not like it's going to take a couple of months. It's like Brexit took like 3 to 4 years, and it wrecked the Forex market as far as like trading pounds and margins and euros, and nobody knew what was going on. And anything that was said about Brexit was noisy, but it really didn't change anything. It was just uncertainty. And it was like somebody said yesterday, I was like, the fog of war, what's up, everyone's been realizing in the last couple of weeks. I think it's also like the fog of peace, because we're being told both things. It's like, it's going to escalate. Is Israel still attacking certain spot? I have no idea, man. And honestly, at this point, kind of like the news cycle, it's like, I don't really care. The market is kind of our ultimate tape reader. And right now the market seems to be thinking that this ceasefire is the start negotiation. I think that if the Strait of Hormuz is going to be shut down entirely, I don't think that's going to actually work for Iran. I think that you're going to have, think what China's been doing when they're actually not shipping anything. Like, China's like, no, we're just going to hang on to it. We don't want to give it. We don't distribute it. Like, it's messing up trade alliances. And I think ultimately it's going to make, Iranian oil, China's a big buyer of that. So like, if that is all disrupted, that there's a lot of, revenues from, it's Iran that is just in as much trouble as all of Asia global supply. The one thing I'm worried about, and it's probably not now, would be maybe 6 to 8 months from now, maybe 8 to 12 months from now, is we're seeing these inflation periods. Like this morning's PPI was good, as far as like lower than expected. But if this is going to be something on like overall commodities, DBC was one thing that I was looking at trading. I've been long in this thing since the low 20s. I took profit along with all my energy stocks in the last couple of weeks to raise some cash. And this overall exposure to soybeans, wheat, corn, aluminum, copper, natural gas, like sweet crude oil, like all these things would be interesting to see. If we're going to have a commodity boom, this actually could be a pretty good spot to play it. I just don't know if this is, hitting resistance around $30 to sell all the way back off, and then maybe we can buy it again. But I was talking about the fertilizers disruption, is if we start to see that translate into terrible seasonal crops and in a poor crop season, and all of a sudden our food prices, go up by 50 to 100% later this year. That's my one concern that's not in the market right now, but that's a big question mark, is like, do you trade that? Do you make a bet for that? I bet on inflation in 2021, 2022, kind of got paid on it until the market turned and went south for 10 months. And then you're fighting against it. So it's a hard trade.
That's the other thing you brought up, the concept of like, if you were to have this thing be much more drawn out, because like the market seems to be thinking like, all right, it's
over it.
Yeah. Like it's 1 month, like this has got like 1 month left to it, and then it's done. And maybe so, but if you don't get it, that talking about things that are not priced in, I think that would be definitely something more worrisome. Is like, if this thing were to stay ongoing, Like oil price at 96 is perfectly fine if we kind of have the inclination that we're going to make a move lower in coming months. But what if we are actually going to make a move to the upside in coming months? That's going to cause a lot of pain in the equities market.
Right.
There was the post by someone from the Iranian side saying, enjoy $4 to $5 gas while it lasts.
I saw that. Yeah.
We'll see. There's talking on both sides. There's bantering on both sides. It's very, very difficult. And again, this is why I think you said the expression fog of war or fog of peace, either ways. If you're a trader out there, like, be careful what you're watching on social media, because the narrative that's going to get peddled to you is going to speak to you as if it's an absolute, but nobody knows exactly how things are going down. Negotiations could be going really well right now, or they could be falling apart. But if you're listening to like your perspective's narrative on social media, you're going to think, oh, negotiations are going this, or negotiations are going terrible, or great, or excellent, or like Iran's in trouble, or US is in trouble. You're going to get fed on your social media platform. We all know this. Like, you get fed what you believe already. And so be really careful with that narrative. And Chris, I think that goes back to your point. Like, let price be your guide on this geopolitical stuff, because there are so many people. I came out the gate today talking about this. So many people in my comment section who are just like super angry about this. They're like, how in the world? This is impossible. But again, if all you are seeing on your TV, on your mobile device, on your YouTube, whatever, is one narrative, then you're missing the reality of the world, which is Iran doesn't want this. US doesn't want this. China doesn't want this. They might find a way to figure this thing out, or something breaks down in the world. But the point is, fog of war is an expression for a reason. We don't know. There's not a certainty on what's going to happen next. And that's where I think you have to be careful. But at least using price as your guide, it seems like markets are kind of posturing for, we're going to figure this thing out. There's going to be something around the corner.
I agree. And also, the big difference with the oil shock we've seen price-wise is usually when we've seen major downturns in the market, major recessions with oil attached to it, it's because we're already seeing deteriorating earnings. This is not the case in 2026. Earnings are forecasted to be solid. We're being led this week by financials, beating top and bottom estimates. I would imagine that this compression we saw earlier this year for the market to be down, from peak to trough 10%, despite all the factors that went into that market being down 10%, we saw individual stocks get absolutely smoked this year, right? So like software, still a struggle bus. But a lot of individual stocks, there's winners and losers. But I mean, the energy sector was up over 40%. Now it's back to 29%. Tech, in your large cap tech, your hyperscalers, your Mag 7, they all had decent corrections. I mean, your Mags was down. I want to say we had a double-digit drawdown here from recent. This is back in October 2025. We had a 20% correction in Mags. So I mean, and it's hard to say like, oh, I should have bought it there. It's like it was between a 38% and a 50% zone. I wasn't ready to buy Mags. I looked at my market breadth indicator. I was, we talked about this a lot heading into this little decline. We got down to like 17. I mean, I was ready to buy and just kind of close my eyes and buy it, like maybe a 12 on this market breadth indicator. We didn't get there, but it turned quickly, and now it's upturned. And so, I mean, clearly there's some flows going back in. The volatility crush has allowed the market to kind of drift higher. We're in positive gamma almost every single day these last like 9 or 10 days. So I don't want to fight that. I'm just annoyed that the market is seemingly moving high enough and fast enough that I also don't want to just step in the way of it's like picking up nickels in front of a steamroller. It's like, hey, this looks like I should short it. It's like, but I can only go 30 points out of the money versus, a couple weeks ago, I could go 70, 80, 90 points out of the money and still grab a pretty safe $100 or two,
Exactly. And that's the thing, Chris. I think we're pointing out that like the tape is bullish. You don't want to fight it. Yep. But at the same time, you want to play the risk reward correctly. And that's where I know that it's painful. It's annoying when the market goes up and every day. I mean, I'm sitting on a good bit of cash, so I'm telling you this firsthand. I would like a pullback. I may not get it. Like I might not. It might just rip through the highs and I missed it. One thing I can brag about, although my positioning doesn't do much bragging for me. Do you remember, Chris? I kept saying, and I gotta point out where I was right, because I've not been very right on some other things. When this market was going down, I was pointing out that I thought the market would see at least a 10% pullback. And I have to point out that I was almost right, but I missed it by 0.02%.
Yeah, the 9.98 pullback.
Yes. So
Yeah.
look at that. 9.98% from
Yep.
peak to trough. I pointed out, and that's when we were seeing this kind of like market not moving lower. I was like, okay, this doesn't make sense to me. This seems like it should see a little bit more downside, probably a 10% pullback. And we went down and missed it by 0.02% from the pullback. Now I can't brag too much on that because again, while I did take some bullish trades in the form of short put options on a lot of stocks that I like, I'm still, on the sidelines with a good bit of my positioning. So I would still like a pullback, and if we can get it, then I think there are some viable dips out there on risk assets. But to your point, picking up pennies in front of a bulldozer, like if you're talking about selling premium for the options traders out there like Chris, or if you are looking to simply take a directional bet, which would be a little bit more up my alley for when looking at SPY or S&P. Like if we see this pullback, this profile, this setup just looks so much more attractive personally to me than to try and take this same trade today, right? So if I were to try and take like, okay, I'm bullish, right?
Right.
But I don't want to take this trade because again, how much upside do I have to get to the top, right? 1.5%. And then a modest pullback would just be, taking back down through yesterday's lows. Like that's very possible that could take place if you get something disrupted. So again, the point is the risk reward to me looks a lot sweeter if we get, that pullback. And then I would probably take, a campaign approach where I'd probably take a couple stabs at it, looking for long side moves with defined risk. So it's a directional play, meaning, I'm looking for that upside and I'm going to cut it if I'm wrong, but probably take more than one stab to the upside. So that's kind of how I would treat it. And then on the option selling strategy side of things, if you're, looking at a VIX that has come down a lot, like you're pointing out, Chris, it's like you were getting paid a lot more for that risk just a couple of weeks ago.
I know.
And now it's like, risk might not be worth the juice may not be worth the squeeze.
Well, I mean, I'm going to find a trade on the SPY that looks pretty good. I'm looking at a 615 by 600 ratio spread, and I'm looking at maybe going out to the end of June. That wouldn't be awful. So 615 by 600, that gives me a $1,500 profit trap. I can still pull in $300 of income. It's going to take a little bit of buying power, but I think that's pretty safe. I'm showing a 96% chance of profit. Even if the VIX goes back up, we essentially have to take out the lows and go lower. If I were to look at the technicals on the bigger picture, I would say that if I own the SPY at 600, even right now, I mean, unless we're talking, Nick, this is a bear market. Look, 600 is way down here. So even if the market were to turn aggressively and we go high, low, lower, high, lower, low, there's still a reflexive bounce most likely waiting there. There's past resistance to the all-time highs. That's a nice round number. I mean, I would play that for maybe a quick $5 or $10. If I own the shares, I'd own it, flip it for $5 or $10 with a quick weekly covered call. I don't know. I think it's pretty safe. And obviously, if price just goes just a little bit higher, maybe cracks these highs with a broadening pattern, we stay at the 8. I mean, what's interesting now is now that we cracked the 20 VIX, I wonder if it's like, okay, that whole regime of 20 to 30 is maybe done. Like the market might be like over it. And if that's the case, then we're not going to see the big fat, 80 to 100 point moves a day. We're going to see much less. And it's going to be the boring, like, okay, the market's going to move 20 or 30 points today because it's positive gamma and just like drifting higher, Yep. So anyway, I think a pullback is due just on the fact that we have, 8 or 9 days in a row, 9 or 10 days in a row. The level you're looking at on SPX, I like that area a lot, like the 660 handle, 650 handle as far as getting a pullback. But that's the opportunity to buy because I don't think a lot of people were aggressively buying that 9.98% dip. I really don't. I mean, I see most what I'm seeing is people are out of the market worried that this is going to get way worse. And the 200-day moving average, which we've seen every other time when we close below it and it rejects that wave lower is usually much more painful. So a lot of people were using this rally as, just like we talked about, de-risking, deleveraging, and is egg on our face because we were de-risking, deleveraging. The market just says, haha, we're going to the upside. It's like, well, I mean, a week ago, this optimism wasn't here. That's what's so crazy about the market right now. Well, it's like everyone's now like back on the bull train again. It's like, yeah, but nobody bought a 10% dip outside of, I was selling premium, but nobody bought at, I mean, unless you did, but nobody bought that because it was way too scary.
What you said right there was perfect. Let me show you, or the audience. I think you know, but I want to show the audience for context exactly what you're saying, because you're spot on with everything you just said there about sentiment. So what we do here a lot for new viewers in the audience, Chris and I, we look at sentiment tools all the time. Chris likes his percent of stocks moving over certain moving averages. He likes, the breadth trade. We also take a look together at the AAII Investor Sentiment Survey. I like to really watch the put to call ratio really close. In the options world, I mean, we go through these sentiment indicators because it's a really, really powerful thing. So let me just follow up with what Chris was pointing out there. With the S&P 500 bottoming right around March 30th, that was a Monday morning. On a March 30th, that was the market bottom.
We finished the quarter with that crazy rip, by the way. Like that
Yes.
March 30th bottom, the quarter ended with a huge rally to the upside.
Yep. Coincidence? I think not. A little window dressing might have gone on there. But you had on that day, let me show you, the put call ratio reached its highest point outside of one other day on March 19th. But the March 30th point there, that was the extreme low in the stock market. And at that time, we reached our threshold of what is considered a high put volume. What this does, by the way, the calculation behind this, it's just a standard deviation. It looks at the spread over the last 30 days or so, and it generates a standard deviation. So we reached extreme levels of put demand all right around where the market bottomed, like to the day. We see this happen so frequently. It's like right at market bottoms. You pointed out nobody was really probably buying that dip. Of course, there were people buying that dip, but the majority, right? We're talking about the aggregated.
I saw a lot of smart de-risking, like a lot of smart macro people were like, hey, just in case it gets worse, like this is a time to get out of the trap longs. This is a time to de-risk. And it's like, I'm all for that. Like I feel much more confident having 50+% cash. Like I'm annoyed that now if I'm going to buy something, it's like I'm 2% off the highs versus 10% off the highs, but I'm safer and I've got more cash to work with.
Right. And so we saw, like, right at that moment, you saw a huge surge in put volume. And at the same time, check this out. Here's our other indicator, the weekly filed AAII Investor Sentiment Survey. Right at that time reached, recent lows, I guess one other time around that March 19th level. That was the two low points in regards to sentiment, where we saw over 50% of market respondents to this survey, which is a widely conducted survey, saying that they saw the market as bearish looking out the next 6 months. And this happens so often, is the market bottoms on really poor market sentiment. And so that's why we track sentiment, because a lot of times that can actually be a contrarian indicator. And it goes both ways, because you just pointed out at the end of your conversation there, Chris, that now the market has flipped to bull camp. Boom, there it is. Look at this. Right. We have everyone rushing the call side now. And so that's where we talk about the risk reward just being a little less sweet when you now got everyone kind of on bull camp. I mentioned this earlier. If you guys want the tools that I'm using here, we're doing our 40% off discount. We'll drop the link here in the live stream chat if you want to speak to our team about getting a copy for yourself. Chris, any last thoughts on that sentiment story? Is this, I think that's something worth thinking about. It's like, all right, now we flip to everyone's on the bull side. Maybe a little caution is warranted.
Yeah, I mean, it's cautiously bullish. I think that, to the surprise of maybe a pullback, having 9 or 10 days in a row is not a surprise to see the market pause or pull back briefly. I'm going to sell some premium around that 600 handle on the SPY. I'm probably looking at some bear call spreads or some broken wing butterflies today, which is just a fancy way of saying I'd like to kind of sell the top in the short term, but it's got to be out of the money. I mean, my plus minus on the day for SPX is freaking small, man. It's 33 points on the day. So it's like, if I'm going to sell something, I'm going to go like 40 points higher, 45 points higher, and see if I can get any reasonable premium for it. The good thing is with the print this morning, we're drifting a little bit higher pre-market. I see a pretty big gamma level at 6,900. So my goal is maybe to take a more aggressive stab around that 6,900 handle. It's a 0 DT bet, so I'm going to hope for the market not going to the upside of the expected move. I'm hoping that it is pretty much like routine that we stay out of the money and the market stays efficient. Because yesterday it wasn't. It was. By the way, right. Did you have a weird? Did SPX not work on your feed yesterday? Like SPX 500, but SPX, like, did it not work in your charts yesterday?
I wasn't watching it. I haven't been trading SPX very much recently.
All right. Well, it was for some reason that was the only ticker that didn't move at all yesterday. So I watch this stuff every single day with this indicator, this expected move box that I built, and it just now caught up with the move. But so yesterday I had my expected move box at 55.05. It did rally up through that. So today should be an expected move type day where it's going to stay within the plus or minus, 30 to 35 points. So, anyway, it was literally one ticker that's like, why is SPX not live right now on a 1 minute chart?
Weird.
Yeah. So, and it's kind of what I trade every day. So it was
You've
kind of
still
annoying.
got the little, I've got it here too. The data issue, no real-time data or data vendors investigating the issue. Weird.
Right.
Weird.
So it is weird. So what I opted to yesterday is I went to the CFD, and this stuff is happening, and we went to 69.11 and we came back down. So we're already starting to see a little bit of this like pause on the day. And I think I'm going to try to take advantage of that with some bear call spreads today. But
there you go.
We'll see,
Chris,
man.
Yeah. We're out of time, but as always, thanks for coming on, sharing your thoughts. Really interesting stuff here, and let's see if we get any kind of pullback here in this market. But in the meantime, thanks for coming on, and we will see you on the next one, man.
Okay, thanks, Nick. See ya. Guys, up next, we've got Tiger Barry taking over the stream here. He's going to be going over some of his current market setups. If you like Forex, he's a big Forex guy. So if you like currency pairs, I know we kind of neglected the FX side a little bit during Chris and I's conversation today. Talked a lot about S&P futures and what's happening with the dollar, et cetera. So for a little bit more focus on the FX side of things, stay tuned for your next show host here, Tiger Barry. Don't go anywhere. He's up just after this quick break.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
What's going on, everybody? Happy Tuesday. I tell you what, I got my pre-market video out just in the nick of time before my stream this morning over on my FX Empire company. So good timing. Hope everybody's doing well. We had some tornadoes here in Kansas City last night. They were about 10 miles, not even that far, about 5 miles south of me. My old hometown of Ottawa, Kansas actually got smashed. Some of my friends on Facebook were posting videos immediately afterwards last night. Quite a few buildings, trees, everything was just destroyed. My sister-in-law, previous sister-in-law, it was just a big old mess, guys. Welcome to Tornado Alley. That is Kansas. And ironically, we had two tornadoes about not even 4 miles apart. So quite a fun evening. I got to bed late. Okay. Just making sure I was out of the woods, but we're all here. We're safe and sound. So tell me what you guys want to check out. I do have 3 or 4 tickers I've got my eyeballs on. I'm just bringing my chat over so I can see you guys real quick. Let's see here. President Trump announced 34 tankers went through yesterday. He said that was the most that had went through the strait since the war began. So that sounds good, doesn't it? Sounds a little bit good. Anybody? I mean, that's good stuff. Gold. We'll check out gold here in a second. 24 hours of risk on trading. Okay, since yesterday, we had that, obviously, those risk off gaps Sunday here in the States, but Monday for you guys across the pond. And then that stuff got quickly closed and have exceeded beyond some of these other, some of these gaps. So we'll just take a quick look from the top down as far as like the VIX and Dixie and some things like that. But VIX, volatility index, the fear gauge, back below 20, ladies and gents. Okay, really anything 20 and above is, pretty elevated. When we start getting down below 20, it's a little bit easier to breathe, let's just say. So that's where we stand there. The Dixie, okay, it's continuing its push down. We did finally break through the rest of this daily 1 hour. I keep saying 4 hours, 1 hour. Daily 1 hour demand zone confluence that we had, and we just tore through it like crazy. So really the next stop on the bus trail here is this daily 4 hour that we got down here, really at about 97 and 97 3/4 type area. Okay. As far as potentially getting some of the next possible bounces. I'm not saying it's going to, bounce all the way back up. I'm just saying we could at least get some type of bounce before it decides to continue downward. So that's a little bit of a look at your dollar yields. They're pretty well going sideways. I kind of drew up a former resistance line over here, and that's kind of where we're at right now. Sometimes these lines act as magnets. Okay? They act as magnets. So 4.29% is kind of where we're at the moment. Oil, we are getting a little bit of a decline as well. Asia was pretty well sideways, London sideways, but really the latter part of New York yesterday gave us another push down as as the market started to figure out, hey, maybe this is a good sign for risk on. And we clearly got that with WTI and then Brent as well. Brent didn't quite close its gap, unlike WTI, but it's about 2/3 of it was closed, it looks like. Natty gas dropping down to, I think, February lows. What was it? Not February. Looks like November 4th of 2024. So there you go. Gold, since you mentioned gold on here, and I see pound dollar as well, Clarita. Yeah, I'll hop on that, especially with the new blockade. That's right. Yeah, that did commence yesterday. So we've had not quite 24 hours of that. I think about 22 hours or 21, 23 hours, something like that, of the blockade. Yet some ships are going through. So I don't know. Was those 34 ships before the blockade, during the blockade? I don't know. I didn't see that detail, but yeah, we'll definitely take a look at pound dollar as well. But yeah, just to finish up on gold over here and silver, let's take a quick peek here. So with gold, it's basically still chewing between this supply zone over here and then this demand zone underneath. I don't know. I might have mentioned to you guys yesterday, but I kind of look at that as just kind of an overall sideways chop type area, fair market value. Okay. It's basically 5 or 6 trading days where we've just basically stayed between that 4,600, 4,775 level. So these are those retail chop zones I had mentioned a lot. The diddle in the middle, okay, where people tend to get chopped to pieces. Now, if you're on a smaller time frame and you've got a sideways trend style of a trading style, then maybe you're liking this. But for me, as a shorter term swing trader, I hate it. So I really want to see a breakout, convincing breakout of that kind of that box there. And obviously we need Edgefinder to line up with the signal because it's still giving us neutral signals. The silver picture, I think, looks a little better because we are still continuing to get a series of higher highs and higher lows on this thing. We did finally break this high from the 8th, so that would have been last Wednesday, last hump day. We got to close, but we have yet to bounce into this overhead supply zone. So I'm not saying I would be trading this, but if we happen to have a bullish look to this, then there's obviously a decent demand zone kind of in this area here that I'd be interested in. But again, guys, we don't only go off of technicals here. We pay strict attention to the sentiment, okay, the relationship between smart money and dumb money, but above all, fundamentals. Okay, fundamentals is what moves markets. Keep that in mind. It's not just a chart. Remember, the chart is the least important of the 3 analysis groups we really pay attention to. That could be a hot take for some of you, but I'll tell you, after 10 years of strictly using technicals and then starting to dive headlong into the fundamentals and sentiment, since I really kind of started watching Nick here a handful of years ago, I'll tell you that it's really, really opened my eyes personally and made my trades a heck of a lot better. Okay. We can try it our way or we can try it the right way. Okay. So figure that out. Stick with us and we'll help you out with the sentiment and the fundamentals to go along with the technicals. But there's your gold picture, or excuse me, your silver picture. Quick look at Bitcoin. We did have that big drop Saturday night here in the States after Vice President Vance did not get the deal in any good directions. We came down from there. Okay, it was risk off at that point, so keep that in mind. We did bounce into this 30-minute demand zone I mentioned to you guys yesterday. I ignored it because I didn't like it. It took 22 hours for it to break out, and it broke out. And it stuck its big middle finger up at me, and I missed it. So, and that was with a bullish signal that we had throughout the course of the weekend. So, I didn't want your money anyway. So we'll just have to reevaluate. And I think Bitcoin has fallen off of our bullish list anyway. Last I checked. Hey, look at that. It's back on. So it's one of those on again, off again assets of late, kind of like silver was last week. It was on again, off again, on again, off again, keeping us confused. So, okay, well, there you go. Bitcoin giving us a bullish signal again, but I got to tell you guys, it's way too pricey. It's way too expensive, in my opinion, up here. Let's go back to a higher time frame real quick. We are bouncing into a former support from way back here on April 25th, guys. That was a support that became resistance a couple times. And now the question is it going to become a resistance again? I think we could get a pullback. But if we get a pullback into a demand, I don't know that I wouldn't. I like this zone, except you just hear me blabber all the time that I don't necessarily like zones that are created from bouncing off of another zone. And that's what this has done. Because remember, this bounced off that 30-minute zone that was created back here on the 9th. So value, it's good because we got a swing low. We got a swing high. This is obviously low on the curve. So I'll tell you what I'm going to do. I'm actually going to move my alert up to it just to see what happens if and when we do fall back down to that level. But this will not be a full risk for me personally. I would take off some risk. Okay, maybe I would perhaps I would make that. Hey, let's get that lined up right. You know, like a half a position, or maybe even a third of a position. But you can't argue with 3 straight expanded range bullish candles that broke this structure. You just can't argue with that. Okay, you guys see me draw this up from time to time with my highlighter, but that is our new impulse leg, right? An impulse leg is defined by a leg of a series of candles that breaks a structure and closes. Okay, break a structure, some call it a change of character if it goes back the opposite way. To me, it's all a break of structure. I don't really use change of character in my lingo. It's a break of structure. Okay? Change of character obviously defines that, hey, we're going against the norm, but whatever. This is obviously a break of structure because it continued that upwards move. So I kind of like this. It's just a -1 for me because it already bounced off of a demand zone, if that makes sense, guys. So that's that. As far as, let's see here, a couple of my alerts, and then I'll get to you guys up here on the chart in just a second. I was looking at, let me go back to my notes real quick. Okay, Aussie Swiss, Euro Aussie, and Kiwi dollar. So let's take a quick look at Aussie Swiss and see if see how this one stands here. So nice bullish signal over here. Let's go down to a 1 hour. Okay, so I'm keeping an eye on this, and don't laugh at me, but this is a 10-minute demand zone. So the reason I kind of like this tiny 10-minute demand zone is because, number one, it's broken some structures on some of these smaller time frames. But number two, if I'm looking at possible points above me that could swing it the opposite way, I do have a supply zone way up here, but it was created in the, let me see, let me double check that one. Basically right at the end of the weekend, the Friday session. So obviously that's where we had our gap down move right there on very thin liquidity. I don't know, I'd be worried totally about that, but even if that was a strong supply zone, that still wouldn't stop me from possibly getting in here, okay, as far as this tiny demand zone. So again, this is quite small. Remember, the smaller that we go in time frames, the noisier it gets, the more you're dealing with retail traders. Okay, I like to trade with the banks. I like to trade with their volume. With the retail traders, it's just a little more sketchy, guys, because, I mean, let's face it, most traders lose money. That's just a fact. So I don't know that I want to put all my eggshells into the smaller timeframes very often, because you can't really rely 100% on a lot of these retail type supply and demand zones that we get created. So, but I do like this one. So we'll see how that goes. I'll let you guys know if we hop into that one tomorrow or the day after. We're still a ways away. Euro Aussie, that's another one I was looking at for you guys. Let's see here. Where are you at, Euro Aussie? I don't think I have yet. Euro Aussie. Where are you at? Right here. Okay, this is, okay. So this is one that hit and already, okay, so the move's already been made on this one, guys. I was keeping an eye on this supply zone that was created yesterday at the beginning of, the New York pre-market. We had a nice consolidation, push down, break a structure, lower lows, lower highs. And I was looking for here, but that looks like, but here's the thing. This actually hit while I was still awake last night, but I never really got a signal to short it. I didn't get a bearish engulfing candle. I didn't even get a candle that broke below this 1 hour red candle that I was keeping an eye on until, well, it would have been while I was asleep drooling on my pillow, ladies and gents. So there you go. Okay. We have to sleep at times, and sometimes we miss signals while we're asleep. I did not want to make that a limit short, a limit order at all. I wanted to be on top of this, and sometimes I miss them. That's trading. Okay. But it looks like it worked out pretty nicely overall. So that's one I could take off my list. And then lastly, before I get to you guys, Kiwi dollar, we did bounce into that zone structure I was telling you guys about. So just a quick refreshment on this thing. Let's see here. We had bounced into this daily supply that I was watching from right here that was created on March 11th. Really nice push down. We did have this 4 hour zone that was kind of half in and half out. Remember, I told you guys yesterday, it had already been mitigated, but it had not at the time been pushed through the 50% of that 4 hour zone. So now we are. And then we come into the 1 hour time frame, just kind of stepping our way down, guys, looking at our confluences. And you can see we are now bouncing into this 1 hour candle, which is inside of the 4 hour candle, which is at the start of the daily candle. So that's a 3 time frame confluence. I love those. Now I'm just looking for a bearish candle, bearish engulfing candle. And as you can see, it looks like right now we're kind of, well, we're still within that 1 hour candle. But the only downfall to this, guys, and why I may possibly end up skipping this is because where's my 50 EMA, which is the teal blue? It's above my 200 EMA. So I think that we're probably now in a spot, and it looks a little different on a 4 hour chart, but I'm looking at this on a 1 hour. We could very well be in too established of a trend at this point. And we did have negative PPI data come out for the US dollar, right? So if it's negative for the dollar, then how's that going to help the Kiwi? Well, it's probably going to make the Kiwi a little stronger, at least in the interim. Okay. So that would be an up move. That would be a bullish move. So it may very well chew through my zone, all because of our PPI data that we just had come out for the dollar. That's horrible. Well, I don't want to say horrible, but that's not good. You had a previous core number, 0.5. You go all the way down to 0.1. Totally missed the forecast. And then really the same thing for the main PPI, 0.7. They actually forecasted it to go up, but instead it went down. So, yeah, that's good for our wallets. That's good for items that we buy here in the States, but it's not good for the dollar. So if it's not good for the dollar, then I don't want to be buying the dollar relative to the Kiwi right now. So I'm just basically in wait and see mode, sit on my hands. Kiwi dollar itself is actually falling off the list, it looks like. Yeah, it was, and this was on there a little earlier as well. But yeah, now that everything is updated, Kiwi dollar is back down to -4. And then if we look at the US dollar, PPI, so this is still the old number. If I refresh this, it may be updated by now. So that's 54% before this PPI came out. And if I refresh this, because I just put this up there probably before it updated, we'll see if it updated by now. There you go. Okay. Now we're bearish. So we went from 54% down to 45%. So now the dollar is under the 50 median line, if you will. Okay. So it's not strong like it was, what, a week ago, week and a half ago, before we started having some of these negative data points come out. Okay. We had a neutral CPI, but today's PPI was bearish. April 9th, we had jobless claims come out bearish. And then also the GDP number, guys. Remember, that came out disgusting compared to the previous number, 4.4%. Forecast 0.7 went down to 0.5. So the dollar is no longer the strongest currency. And with the risk on moves that we've been getting, because the market seems to think we're going in the right direction with the Hormuz situation, the Iran conflict situation, it's just not a good time to be looking at the dollar and as far as buying like it was a week and a half, 2 weeks ago. So that's kind of where we stand on that. And as far as the top setups go, yeah, still Aussie Kiwi at the top, which we kind of went through. Nikkei, FTSE 100, handful of currency pairs, and Bitcoin just popped back on. So that's where we stand. Let me take a look at you guys. I got 10 minutes to blitz through some charts for you. Yeah, so gold, I just went through gold for you. Pound dollar short. Let's see, pound dollar. Let's go have a look at that for you. Blah, 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 blah. Okay, so we did bust through an overhead supply. So what have we got? we got a new impulse move, right? Remember, it's a series of candles that break structures. So we broke through this, what you could call it a quadruple top, maybe, I don't know. And then, of course, we broke through this little more major one up here. So we're currently in a little bit of a bullish move, if you ask me. Our 50 climbed over our 200. This is a 4-hour chart I'm looking at this at. As far as, and remember, the dollar has, all the other 7 of the 8 major currencies have kind of been progressing against the dollar of late. So yeah, we may be having a little bit of up moves. I mean, this thing's neutral, but where is pound dollar? It's a +3. So it's still neutral, guys. I wouldn't want to be going out and buying this thing, but I would be wanting to mark up some spots on the chart. Okay. Perhaps we get some more negative US data. Perhaps they actually sign a deal. If they do that, well, then I'd be interested in looking for some pullbacks. Now, this is a 4-hour chart. If I'm looking for a demand zone within our impulse move here, let's see here. I'd probably keep an eye on something like this for you. Hey, there's a little bit of a 4-hour demand. You got kind of a fat doji candle. I don't even know if we should call that a doji, but you know, it's got wicks on both ends, a little bit of indecision, and that's also lining up right at kind of a former what do we got? Support, resistance. Okay, support back here. We pushed through here, kind of became resistance, although it pushed kind of deep into it. Resistance wick here, resistance wick here. Okay. And now the question is, could it become support? So it went from support to resistance, and now we're looking to see if this will turn into support. Okay, so we could look at a move like that if and when Edgefinder matches up. So if we get some stronger pound data, some weaker U.S. data, or we get an actual signing on the dotted line for this silly damn war that we got overseas, right? So that's about the best I could do at the moment. And obviously we could go into some smaller time frames, look for some confluence and such. Last thing I'll look at. Okay. Yeah. So that's where it would all start, basically from that zone at 1.34 half, basically call it. Hope that helps on that. Kiwi dollar. We went through that. Okay. Euro Swiss. Let's take a look at that for you. Jin Yang. Yeah. We'll take a look at that. Euro Swiss is off our list, so we're neutral. Let's see here. Where was that? -1. Okay, so that's almost as neutral gets. Let's pop up my daily on the right real quick. Okay, my 8 is above my 21. Oops, I didn't mean to do that. So that signals a little bit of bullishness, but we are starting to pull into this daily supply overhead. It's flirting with it right now. It hasn't touched it, but sometimes all it's got to do is just blow on the price action. It'll go the opposite way without even touching it. So that's kind of where it's at the moment. Let's go reset this 4-hour on the left. There you go. You got a top, you got a double top, you got a triple top. We have started pushing down through some of these minor supports, if you will, or swing lows or structures. But we're currently kind of still chewing through the rest of a mitigated demand zone down here. So I just think I feel like it's a little bit of fair market value over this last couple of weeks for you. Kind of the diddle in the middle, if you will. Okay. Demand, some supply, and we're just kind of chewing through this. So I don't really like that picture at all. Not only, number one, because the Edgefinder doesn't like it at all. Number two, it's too clustery if we kind of go back out to a higher time frame. See all these wicks? Okay. Most of the wicks are up top, which to me does signal that it wants to try to move downwards, but it's just been there for about a week and a half, 2 weeks. So that's just a cluster. If we break out of this cluster, okay, if we break out of this cluster to the downside, to the upside, then I think we could reevaluate it, assuming Edgefinder gives us some type of a signal. So that's about the best I got for you on Euro Swiss. Need more information, like we say often. Okay. Dollar-CAD. Dollar-CAD for epoxy. Let's have a look at that for you. How much time I got? I got 5 minutes. Okay. So looking over here on the right, okay, we bounced into a daily supply at one point on the Dollar-CAD. It obviously pushed us downward. Okay. And now we're kind of pushing into pretty close to a 50% bounce off of this contraction box. Okay. With my master pattern. So also a former support resistance. You see my blue dash line. If I scroll left, that's going to go all the way over here to this area, it looks like. So some possible bounces on this thing. Okay, Dollar-CAD's a +2, so it's neutral. So definitely don't have any interest in getting into it at all. But if we're just looking bigger, if we're looking kind of higher time frames, okay. If you guys are fib traders, we are at the 50% line. The 61 is a little lower. And if we drill into this spot right here on a 4-hour, I don't know, man. Let's see what we got. Do we have any decent looking zones of demand? Let me turn off my indicator real quick. Not really. See, this is a doji candle, indecision candle, but this wick overlaps this wick, 2 candles over. So that's an efficient price structure. And it's kind of retraced quite a ways. We're talking 150, 200 pips, whatever that is from the swing high. So 4-hour is cutting it, but I definitely don't want to be going down to a 2-hour or a 1-hour or a 30-minute to try to find a gap, a gap showing, a strong spot where demand did exceed supply here. So to me, this is a no-go. This is a no trade, even if we had a bullish setup on Dollar-CAD, which we don't. Need more information. I think there's better assets out there. But if we go deeper, okay, at the origin of this overall strong move, you can see we do kind of have a 3-candle series on a daily. So I would basically look to draw this up like this, okay, daily. And I have to respect these wicks over here. So there's my daily demand. Okay. And it just goes to show you, I haven't even looked over here at Dollar-CAD for a while. So that's your daily. Looking at the 4-hour. Okay. I don't know. Let's see if we have anything decent down here real quick. Yeah, you can say we got a little bit of a 4-hour demand right here, confluence. And it's just barely giving us a wick, guys. So I don't even really like this, but I'll go ahead and draw it up, and I'll just, instead of painting it my normal darker green, I'll color it light green. That just tells me, hey, something's fishy. Something isn't looking great. Is it the volume spread analysis? Is it the lack of gap? Okay. Things like that. So I don't really like Dollar-CAD at all. It's too neutral, and it's just hanging out in no man's land. Okay. Euro Aussie, can it go to 162? Let's go look. 162. Hey, look, I'll be the first to tell you I'm not Nostradamus. I think Nick and all the rest of the guys on the live stream will echo that. At the end of the day, we'll be straight up honest and tell you we have no idea. How's that for an answer from a bunch of traders that have been doing this a long time? Okay. The point is, we don't know. Nobody knows. All we can do is put all of our odds enhancers, whether you write them down or whether you have them memorized in your head. At the end of the day, all we try to do is stack odds enhancers in our favor, whether it's bullish or bearish. So I'm not a mind reader. Okay, just to be straight candid with you as far as where a price will go. But the best we can do is kind of, forecast with some of the currencies. I mean, taking a look at the fundamentals, where's Euro and Aussie? I think these things are all pretty weak. Okay, Euro's not, it's weak, but it's not that weak, I guess. 40% exceeded on the high impact red folder events detail. Well, not all of them are red folder, but most of them. Okay, 40%, and then the Aussie's right there at 33%. So we're really not getting a separation. Okay, in other words, the Euro is not a 70%. Okay, or the opposite. They're kind of conjoined at the hip. They're pretty close together. So, and it shows on the Edgefinder because again, we had a +2 on that or a +1 or something. So I need more information. I think that's the end of it. The end of the discussion. We need more information to be kind of projected. Because right now we just don't have it. And remember, the technicals are really the least important. So we could look at the technicals and have an awesome view of it, but if we don't have the fundamentals and the sentiment in our favor, okay. This is the one thing I figured out early on, and I'll leave you guys with this as my alarm goes off. I used to spend probably 2-3 hours of my day going on all 28 currency pairs that you see here and mapping out my supply and demand zones. I'd map out my curve analysis, okay, low on the curve, high on the curve, along with some other things, only to realize that I probably wasted my time on 90-95% of that. Why am I marking up a chart? Why am I marking up all the charts when I don't even have a fundamental or a sentiment reason to be trading it? So, at the end of the day, and this is why we talk so highly about the Edgefinder, guys. It will save you a ton of time because you will be able to reference this in a second, especially if you work a job and you're busy and you can't go through all the individual indicators, PPI, NFP, unemployment rate, all that kind of stuff. If it's not even on the list, it's really not, especially if it's neutral 0 or +1 or a -1. It's not even really worth marking out on a chart. Unless you're newer and you need to get your 10,000 hours of chart time in, then that's a good thing, because you got to start finding your patterns and whatever trading strategy you use, whether it's supply and demand or whatever the case is. Get your 10,000 hours of chart time out of the way as soon as you possibly can, and then there'll be a point to where it really doesn't matter looking through all 28 pairs when you start branching out. Just pay attention to the bullish and the bearish ones. That's it. And then from there, you kind of do your drilling down into your multiple time frame analysis and finding a good place to time your trade. So, ladies and gents, I've went a minute over. Sorry. I think we got, who we got coming up here? We got Alan, I think, coming up. So I'm going to get up out of here. You guys have a wonderful day. Check out the old prime code. Trader Nick does have A1 Live for 35% off. If you guys have any questions, look me up. Trade like a tiger. Have a good day. Peace out.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Hope everyone's having a fantastic morning, evening, wherever you guys are watching this. I like what Tiger said here before he went off his stream segment. We're going to give you the boring answer, and the boring answer is there's really not much to trade. Like, the move of optimism has already moved. There's no pullbacks, and it's still up in the air, even that whole negotiation thing. So that's kind of my thought process here. KDX, fantastic. What did you say here? It feels like, sitting on the sidelines is the safest play at the moment. Definitely agree with that. So let's go ahead and look at the chat here. Alan, hope you're doing well in these crazy euphoric times. I'm doing well, man. I've hit a little bit of a losing streak, I'll tell you. Euro dollar, or no, not euro dollar, Kiwi dollar. We got stopped out last night on this big move here, and then Swiss yen as well. So we're kind of flat, which I like to see that. I'm flat. I can look at the market with clarity here. However, even with me looking at the market with clarity, with no positions on, it's still hard to make a directional call at the moment. I was really looking right here at the Edgefinder, looking for some setups here as far as what I can go ahead and do. But the top setups page here is not looking too interesting in my personal opinion. You have a little bit of a mixed bag here, and the ones that you are getting a reading on, like here, let me show you this. We're going to go to the Eco Surprise Index. And for those that are new to the stream here, this is the Edgefinder. This is the tool that I use as far as, making my trading decisions for directional biases, fundamentals, all of that good stuff. I find the best positions, the best trades here. You can see here that most of these guys here are actually kind of like around the same ballpark. So if I go to US dollar sitting at 45%, the pound is at 40, the Kiwi's weak, Canadian dollar's weak. I mean, you guys can see this, right? Euro's weak. The yen is a little bit stronger here, but again, still relatively kind of like in that middle zone. Aussie dollar's weak. The Swiss franc's weak. So like the readings that you're getting, they're good readings, but they're also like kind of weak there. So when you look at a chart, it's really hard to kind of like determine where you want to go. And I think a lot of this movement here that we've been seeing, for example, in the Aussie dollar to the upside, Kiwi dollar to the upside, just ripping up there, pound, euro. In my personal opinion, you guys correct me if you have different ideas, but it's not so much that the pound is strong or the euro strong or whatever. It's not that at all. It's just that the markets are pricing out some of this safe haven bid that we were seeing into the dollar index. So it's not necessarily strong fundamentals that are driving this market. It is just, like someone said in the chat, in the Discord, it seems like hopium to me, not cautious optimism. So all it takes is one thing, one catalyst to go ahead and just disrupt all of that hopium, and the house of cards starts to fall down. So that's kind of my thought process here when it comes to trading these currencies here, is like you don't have any significant, strong or weak, relationships, right? Because when you're trading currencies, you're trading two at a time. So the best trends are when you're getting something that's really, really strong against something that's really, really weak, right? You want to have those very two, polarizing opposite ends. You're not getting that here. You're getting mostly everyone's within the same, kind of framework there when it comes to strength and weakness. So kind of my thought process. If you look at this from a pure technical perspective, you do have dollar index here hitting this level of support, this $98 handle. This seems to be like a solid level, but again, if you were to see continued, talks in the Middle East, progression, all that good stuff, this level can definitely just fold right below. So this is the $98 handle right here. Good level of support in the past. Maybe we hold it here again. It's very, very shaky. What I would rather do is I would rather wait for maybe we pull back into 98.50, right where these moving averages are at. You get something like this, and then you can short the dollar index to the downside. And that's under the impression that we continue with the optimism that we're seeing, right? The talks in the Middle East. That would be my thought process. And what that would look like is either going long the euro on pullbacks, long the Aussie dollar on pullbacks. So maybe we get the Aussie dollar up into this 50-day moving average here. Maybe that's a good play. Also, you have the Eurozone here. So let's go ahead and look at that one. If we were to put in fact, with euro, I think a good pullback here, considering this big leg up that we've had, maybe somewhere up into this moving average here again, the 50 and the 200-day, right up on that 1.16500 level. So that's kind of my thought process there. So don't want to jump into anything. I'm going to be flat. I know that's the boring response, and I know that a lot of people are looking to get active here, myself included. Trust me, I definitely want to be participating. However, I was talking with Marco yesterday, and it was like, you have this big monster move up here when it comes to risk, right? You don't want to chase price because one catalyst can really just go ahead and disrupt that, and then you're caught in all of this drawdown there. So that's kind of my way of thinking here. H Ballout says DXY, hope you in shorts and eating wagyu bulls. I'm not in a dollar shorts right now, but again, I do want to participate if we get DXY maybe to 98.5, 99 maybe. I mean, the higher the better, right? Ideally, if we can somehow kind of fill this little gap that we've established, that would be good. But again, 98.5 is a good level, in my opinion, to go ahead and short the dollar. Speaking of the dollar, let's go ahead and look at probabilities here for rate cuts. It seems like they have moved up a little bit. You do have a somewhat 30% chance here. Let's see, actually. So towards the end of the year of 2027, you do have a couple rate cuts on the horizon. But for now, the market's kind of anticipating that we're going to stay flat for the majority of, or all of 2026 and the majority of 2027. So that kind of doesn't really change much. Again, this chart here will move pretty quickly depending on what happens in the world. If you were to get, ceasefire talks, progress in that direction, and yield starts to come down and oil comes down, then this thing can definitely, it's very possible that it sways into 2026. We get more rate cuts on the table. So again, this is very, very much a fast moving data set, if you will. So definitely go ahead and watch that when it comes to the dollar and rate cuts and stuff like that. So if we were to get more rate cuts, that's bearish for the dollar. And if you were to get some kind of a hold or hawkish, that is bullish for the dollar. So those are two things that you have to really consider and monitor. And this is a free tool. I love this tool. This is the Fed Fund Futures. If you just go to CME Group and look at probabilities here on the left-hand side, you can go ahead and see the probabilities for rate cuts. And this is where we are currently at right here, from 350 to 375. That is our current range here. And you can see here that we're going to be holding at this level for some time, all the way into late 2027. So yeah, one thing I also need to watch here is yields. They are coming down from the recent high that we made. However, we're still somewhat elevated here. This is the 2-year yield. Let me go to the 10-year yield instead. So yeah, we're still elevated. However, we are making some progress on that front. I would really like to see yields kind of back into this area right here where we were before the war. Somewhere within here, I think that is good. But again, we are still elevated. And you'll see this chart drop alongside the rate probabilities getting pushed up when it comes to, rate cut hopes and all that good stuff. Okay, Simo says, well, Alan, that separates experienced traders and people that still trading with emotions. Sometimes the best is to stay put. Yeah, man, you just got to stay put, and staying put is not always a bad thing. Like, yeah, I'm flat right now. I want to participate. However, that just means that whenever the time is right, I'll be very patient there, and I'll be ready to act, and it'll work out. And usually when you sit out and you're being patient and the opportunity presents itself, um, you know, the new trade that you take on after that really makes up for all that dead time. So yeah, it's not necessarily a bad thing. I would rather they say that no one has ever lost money by being flat. So yeah. One thing I did see on the Edgefinder though, and this is something Marco and I talked about, and perhaps we'll get more into it when Marco joins the stream here with me. But when you're looking at relative strength within the currencies, I mentioned, dollars kind of, mid, pounds mid, Kiwis mid, right? Everything's kind of mid there. However, you are seeing a little bit of a pickup here in the Japanese yen. And you can see that illustrated here. If I scroll down to the bottom half of the chart, you can see here that the Japanese yen is here in orange. It was kind of around here, and then you kind of dipped a little bit, and now you're starting to creep its way up, and now it is at the top of these lists across the majors here. So I do like the Japanese yen. I would like to pair that against a dollar that is weakening, so maybe dollar yen shorts. However, this is something that I haven't done in a while. This would be more of an intraday play, right? In an environment like this where things are up in the air, the headlines can come out any second. The best approach, in my personal opinion, would be like to short this intraday, very short, very short term time horizon, very low size. Maybe the P&L is not going to be good at all. You're probably going to be like in my case, maybe like $100 stop loss each time I try it out. However, it can, do something, right? So if we were to get back into this area here, this level of resistance we established here yesterday on the stream here, it seems like every time we get up here, we get some nice drops to the downside. We did that yesterday. We're getting some drops to the downside. So if I compare a strong Japanese yen against a weakening dollar, especially if you get some more, safe haven, status priced out of that, then I would like to continue trading this to the downside. But again, right now, there's no trade for me because we are basically in the middle of what seems to be a very, very short-term range that we are participating in. So if I just do this, this is essentially what I'm talking about. I'm going to make this a green zone. So we kind of bounce up higher, and every time we tag the upper ends of this channel here, we trade it lower. So again, we are in the middle in no man's land, so there is no trade for me. So again, we have to continue to stay patient on this. And that's kind of my thought process, man. Like equities too, moving higher, very dangerous, especially if you're chasing, right? Even if you got in on yesterday and you're getting this move right here to the upside, very, very cool feeling, I bet. However, it takes one thing to really disrupt this trade, and this thing really starts to pull back on you. So you just got to be very patient on that. You think they are setting up for a big short? Mongo, I don't know, man. I would say probably not. The way the market is interpreting this is good. I would say, Mongo, if you get some more progress in the Middle East as far as talks happening and the ceasefire and all that stuff, and end to the war, then a lot of the fears that were kind of like insinuating a big short type situation probably go away. And so maybe that becomes less possible. But if you were to get, no de-escalation, things increase and oil prices stay high and stuff like that, that can really start to hurt, all the economies. And then maybe you get a big short kind of thing. But no, I think right now, no. Marco, what's up, man?
Hello. How are you?
Pretty good. Pretty good. Just
awesome.
Patient here. How about you?
Doing pretty well. Liking this sort of continuation of stocks. They're really flying, and we seem to be starting to fully ignore the Middle East, which is better long term because it's easier to trade if we go back to actual economic data. And I think we had the PPI recently come in today. So that was a bit of a mover as well. But I wanted to show you this chart. This is Avis, and there has been a massive explosion.
I can see that. It looks like gold. That looks like gold, like in the beginning of the year.
I mean, from the start up until now, it went up 223%, which is pretty crazy. So crazy stock. It's just Avis, like the rental car company, and it seems to be a short squeeze. So apparently, from my research, a lot of investors were positioned short, and the liquidity was pretty thin. So it didn't take a lot to make the market here explode. And I thought this was pretty funny. So I haven't seen such an impulse on a stock, let's say in the stock market for a long time.
That is definitely a run up. That looks like GameStop. That short squeezing GameStop. Dang.
Yeah, we may get a Wall Street Bets post on that. Some sort of a short squeeze from all of the guys at Wall Street Bets. Also, I'm seeing my Nikkei fly here. So Nikkei extremely bullish, almost back to all-time highs. I didn't manage to get in. I never got a pullback. Instead, the market just flew higher. I think it's still a bullish reading on here. Yeah, still bullish. I think this is going to go to ATH pretty soon. So maybe if we hit the all-time highs, we retrace a bit, pull back to the 20 MA. What I'm noticing, the markets are sick of the war in the Middle East, and people just want to buy. People just want to own stocks. They want to own software. I think software has been going up recently. I forgot the ticker. I think there's one ticker you can use to look at the whole software stock market, but I forgot what the ticker is. I think it's IGV, maybe something like that. Let me check.
Let's see here. Yeah, IGV. You're right.
IGV. Okay, cool. So yeah, looks like IGV is catching a bit of a bid from Monday, which may mean capital is rotating back into software. If the viewers will remember, there was a rotation out of software and into, I think, healthcare, energy, and other stocks. And now capital seems to be flowing back into software. Artificial intelligence may be coming back into the spotlight. So if we look at the Nasdaq as well, I mean, Nasdaq just looking absolutely bullish here and pretty close to all-time highs. I think from
Very
the all-time
close.
highs, from the all-time highs, we're down 2.6%, which is absolutely nothing. And also, before we proceed, I just wanted to post the link to the giveaway form. So if you guys want to participate in the DNA funded giveaway, there is going to be a link to the form in the comment section. And today it's going to be a 10K one-phase account. So definitely take advantage of that. I assume you're staying mostly flat during this period, which I think is a pretty good way to go. I think you can definitely take some losses in this market period, and staying flat is a good option. But what's on your radar?
Yeah, I am definitely flat here. I was going over the Edgefinder here because when you're trading currencies, you want to trade for the best opportunity. At least you want to trade something really, really strong against something very weak. And right now you're seeing kind of everyone kind of being within the same range, like in the 45s, in the 30s here. So like there's nothing really, really strong and there's nothing really, really weak. So like it's really, really hard to find that, relationship versus strong and weak that you're really looking for. The only one that's kind of like catching my eye here is the yen. The yen basket as a whole is looking kind of okay. And if you look at the economic heat map for the Japan, you can see here that it's actually looking quite okay. So you have a lot of things going for it there. Again, you also do have the narrative of they're looking to increase rates, and so that obviously make it more attractive. And so the way I would kind of play that, the only thing that I would look to do here in this market here would be to get a pop in the yen and then just short it intraday like we talked about yesterday. It seems like that 160 level or, around there is a good ceiling. So if it seems like, very consistently here, whenever you do reach that level, you get a pop to the downside. Again, it's very short lived because it ultimately ends up coming back against you there. So that's kind of like the thought process that I'm in right now. However, right now we are kind of like in the middle of this overall range here. So there's really no trade at the moment. It would take for a pop into this level again for me to participate. But for now, honestly, man, there is no trade. As boring as it sounds, especially for the viewers that are, coming to the stream for for trade ideas, for market commentary, all that good stuff, there's really no trade right now, and that's not a bad thing. So yeah, only dollar yen to the short side would be the only thing that I'm playing. But for now, like, there's a lot of things lining up technically, like for example, Dollar-CAD, something that I really like technically speaking. However, if you were to get, more progress in the Middle East, this level can definitely just, fall and not hold at all, and this thing continues lower. And you're seeing that across a lot of major currencies, like the euro dollar. You are now at this level of resistance here. Again, you had this crazy just monster run up here, very consistent. There is essentially no red candles within this area. However, again, the technicals can really take a back seat if you have the sentiment really taking over. And that sentiment would be, again, progress in the Middle East. So things are looking good technically. The fundamentals are not lining up, and that's why I'm not going to take a trade.
Yep. I do agree with that analysis. I've been listening to a great podcast which is called The Macro Compass. It's with Brent Donnelly and Alfonso Peccatiello, I think. He's Italian. Essentially two big fund managers, and they were discussing last week. I just listened to it in the gym today. So last week they were discussing what is kind of the best approach for trading this war environment. And what Brent's approach was mean reversion, holding trades for 2 to 3 days. So perfect example of that would be selling USD JPY, for example. So you find a level, and let's go to UJ. You find the level that you like to sell, for example, 160, and then you just wait for a catalyst for a drop, and then you take profit. So the catalyst in this case would be either a de-escalation or an actual intervention. So you're not looking to hold positions for weeks or months. You want to be in for a couple of days, maybe a week. And again, it's mean reversion. So this would be the mean, and this would be kind of the extreme, and then we go back. Extreme, we go back. So it's similar for the viewers. It's similar to the rubber band theory. So essentially you have the center here, and as the rubber band stretches, the more it stretches, it goes back to that level. Kind of, this is the magnet, sort of 160 is the magnet, and then you just wait for a catalyst to take your profit, because you are not expecting UJ to go above 160. On oil, the methodology would be, let's say, buying somewhere here in the equilibrium and then waiting for a negative catalyst, meaning waiting for an escalation, and then you take profit, preferably at the highs. So that could be another mean reversion strategy. But yeah, it's tough. It's a tough market environment. Like the pros, the hedge funds, if you look at the performance of hedge funds in March, they're down. They're down a lot, because I think they're all mostly short volatility, and volatility went pretty high in March. So they got crushed. I think on Bloomberg, you can see the top 15 or 20 hedge funds, and like, I think 90% of them were in the red, which was interesting to see.
It's really hard because, like, again, we're not getting a clean black and white answer. Like, usually it's like, okay, if both sides are looking to go ahead and ease tensions over there, then they would both be in agreement, and then that would be the answer that we all get, right? All right, we're talking, just give it time, whatever. Or they don't want to finish, and then you see a clear escalation. It's kind of been really back and forth this time around. So that's what makes it super tricky, especially I like how you said how a lot of markets right now are in equilibrium. And so if you think about it, if markets or the price action on a certain chart that you're looking at is at equilibrium, and there's no clarity, it can go up or down, then it's probably best not to trade anything. Just wait. And these markets can move really fast. So, maybe you think you're going to wait for 2 weeks and you only wait 2 days because in 2 days something happens, right? So, it's tricky. Again, it's the boring answer, but that's just how it is right now.
Yeah, I mean, taking some more long-term positions seems like a bad way to go, because the uncertainty is very high. I think oil should stay at these levels. I mean, oil has been holding for a while, and the strait is still closed. So I don't think oil will go below, let's say, 80, 85. I think that's sort of the support level. And then you get a pop to the upside on any sort of escalation. And then you eventually should go back to that sort of 80, 85 level. So that could be another significant level in this case on oil. But from what I'm seeing, and from what I have been reading, the sort of consequences of higher oil prices have not yet hit the world, or they may have hit, but the world has adjusted almost perfectly. Like, you're not getting the sort of crisis that you would have expected with gasoline going up immensely and energy going up immensely, and pretty much all of the prices across the board going up immensely. So the shock is very, very minimal, which is very surprising to me.
Yeah, so it's actually very, very lagging. I'll touch on this. I'll kind of piggyback off of this morning's releases, right? We had inflation in the U.S. come down, right, for last month. And last month we had is when the war started for that entire month.
Yep.
I saw a video, especially talking over the price of oil and how long it really takes for it to move from point A to point B. And essentially, like, these super tankers, they move at, like, I think it's like 5 miles an hour or something, like 10 to 5 miles an hour, very, very slow. And so you are still seeing shipments getting to their destination that originated like 2 months ago. And so now they're all pretty much getting to their destination. Now you're going to start to see, moving forward, the lack of oil, right? So, like, even until a couple days ago, I think the cutoff was the April 10th, where the last major country was expecting their oil shipments from like 2 months ago or 3 months ago. Now it's going to start to dry up. So unless they get it under control now, then you're going to start to see some real pain. But for now, certain economies are able to kind of withhold their oil supply. They're still getting it. It's just a very much of a lagging effect. And you also did see a lot of super tankers redirect from Middle East to pick up oil to the US. I don't know if you saw that, but there was a trail of, like, a bunch of super tankers rerouting from Middle East to the US. So I don't think it's like that kind of threatening. Now, obviously, if you see this price elevated for too long, the strait is closed for 2-3 months on end, that's gonna be problematic, right? But I think, honestly, like, if you were to somehow get oil within this range of, let me zoom out of this chart here. Oil at, I want to say here, so like sub 84 till 70s, I think that's a good spot. Honestly, it's still higher than before, higher than the 60s, obviously, but it's way better than in the hundreds. So, and that right there is only, that's 15% away, but this thing can move 15% in 1 hour. So that's kind of my thought process, and I think we're kind of getting there. So markets are definitely more positioned to risk on. If you were to pick a side, the price action is definitely indicating that. So I would wait for, me personally, is some kind of a very meaningful pullback to kind of eliminate most of that downside risk if something were to go wrong. If something were to fall through, a meaningful pullback will solve a lot of that problem.
Yeah. And also, one thing I wanted to mention, if we look at the shock in 2022, so when Russia invaded Ukraine, we pretty much never crushed the highs. So this was it. This was the big shock. And we never reached those highs. And essentially, then we started to taper lower. So if we look at the last event, when there was an oil shock, maybe an even greater one because oil went up even more. But I would say, according to analysts, at least, this one is worse. Again, the highs were never touched. So very tough to get a reading on it. Analysts that are like specialists in oil are saying this is horrible. Oil prices will crush the highs that we had. So oil prices will go above, what is it, 119, and stay above it as long as the strait is closed. But so far, the world seems to be absorbing the situation. And again, it could be because what you mentioned, that the tankers are just now going back into the strait and trying to pick up more oil. And there's no way for them to pick it up. So yeah, we will see.
Yeah, definitely. To Simo's point, they go at about 10 to 5 to 10 knots speed, which I think equates to maybe 5 miles an hour. I don't know what the unit measure, but very, very slow. So they're barely delivering their oil of like 3 months ago. And so now, like Marco said, you're gonna start to feel it, unless you get some kind of an opening, or in this case, super tankers are rerouting to the US to pick oil there temporarily, because again, we can definitely, handle that kind of demand there. But yeah, man, I'll go ahead and leave you to do your portion of the segment, man. It was a pleasure. We'll continue to be patient.
Sure.
We'll monitor it.
Yep.
One last thing on oil. We have a double blockade in the Strait, and it seems to be coming down. So that's something to consider there. So we'll see. I think triple. I think it was the U.S. blocking, and I think China was right behind the U.S. I don't know. Double or triple blockade, but you do have oil coming down here. So we'll see how that continues. Again, I'm going to stay patient, me personally, wait for any meaningful pullbacks, and then look to pick up risk if I can. But if not, I'm just going to stay out of it and just wait for this thing to play out. And hopefully, fingers crossed, I can't predict this, but hopefully, this kind of environment that we're in lasts maybe another week or two, and then we can go to the next thing, whether it be the new Fed chair or something brand new. But I'm ready for that to happen.
I'm sure it's going to involve Trump, but maybe it's going to be something that's a bit easier to read or to get the read on. So we shall see.
Yeah. I'll even take the tariffs, man. Put the tariffs back in play. That one I did really well.
That was fun.
Yeah. All right, man. Take it easy.
Yep. See you tomorrow. Goodbye, Alan.
Bye-bye.
I will post the link to the giveaway form one more time. So let's copy the form. Post it here. So if you are interested in participating in the giveaway, getting a 10K one-phase account from DNA Funded. So it was a 5K before, now it's 10K. Okay, so we bumped it up. I have a couple of 10K accounts, so stay tuned for my live streams. There is a jot form in the comment section. Fill it out and you will get entered. If you are looking to get funded and you want to buy a challenge, definitely do consider DNA Funded. So this is my personal 2-phase funded account, 25K. Current profit is minus 270. It was positive last week, if you remember. I was pretty close to hitting the target of, I think, $300 in profit. Then I would do my first withdrawal. But we had some gaps over the weekend, which messed up my positioning. So gonna have to wait and see what happens. Yeah, this is purely traded by ChatGPT, by the way. So I'm not putting these trades in, or I'm putting the trades in, but I'm getting signals from ChatGPT. So ChatGPT passed phase 1, passed phase 2, and now onto the funded stage. If you're looking to get funded, definitely consider using the code A1Live for 25% off. Okay, that is for any challenge. So A1 Live, 25% off. I've had a great experience so far with DNA. There's a big broker behind this company, and they're using TradeLocker, which is a great execution software in my experience. So with the code A1 Live, you get a great price as well. Positioning. I have a buy position on oil. It's currently in drawdown, so it's not doing well. What is the game plan here? Well, I'm just going to let it hit the stop loss. If it wants to hit the stop loss, at least maybe my positioning on the challenge will work, because if you look into it, I am positioned for risk on. So I have a buy on the SPX, I have a buy on gold against euro. And if my oil trade goes to the stop loss, these ones should make some decent profit. So maybe that can bring me to a payout on DNA. That would be nice. But my personal account and my Darwinex account and my prop firm accounts, FTMO accounts, they're going to suffer. It is what it is. So I still like this position. I mean, the fundamentals of why I took the position are still present. The strait is still closed. Iran and the US are not negotiating or haven't reached any sort of a deal. Negotiations fell through this weekend. Trump is now doing a blockade on the strait, which means the strait is closed 2 times, or there's a double closure, if we can call it that. So in my opinion, oil prices should be higher for longer and should maybe go back to 119. Also, from some of the experts on oil, their forecasts are pretty bullish, but again, they may be wrong. So I placed a trade on it, willing to hold it. If I do want to close it prematurely, you will be notified in the A1 trading Discord. That's about it as far as my positions go that are of my own decision. So again, this is purely ChatGPT. This is my decision to buy oil. I was looking at the Nikkei. Nikkei didn't get a pullback. So Nikkei, I would absolutely love to be in this, to be able to participate. But we never got the pullback. We never hit the 20 MA, so I couldn't get in on a buy setup. What I'll be looking for is pullbacks in the future. If we can pull back a bit, maybe hit all-time highs. So maybe this happens, and then we pull back, hit the 20 MA, and then maybe I can get in. That sounds nice. What I definitely don't want to do is I don't want to chase the highs. So I don't want to just get in at this level to try and chase this price, because I think a lot of the move has already happened. Same thing on the S&P. A lot of the move has already happened. Same thing on the NAS. Same thing on the Russell. You know, we may be due for a bit of a pullback. We may hit all-time highs first, yes, but we may be due for a bit of a pullback. And just look at the DAX. Looks absolutely horrible, even after all of the equities are ripping in the rest of the Western world. So let's now do the giveaway. Let me copy all of the entries. Today is the 14th of April. So let us take a look. 14th of April. Let's copy all of the names. Okay, go to my wheel. Paste, spin. Jean-Rene P, congrats on being the winner. I have your information. So after my segment ends, I will send you the code for a 10K one-phase account. Let's get back to it. So how do I join the Discord? There's a link in the description of this live stream to join the Discord. And make sure you use the code Marco to get 25% off. So if you want to join the Discord as a paid member, get access to all of my positions, all of my trade signals, all of my market analysis, and general chat. Well, not just mine. It's Nick, it's Alan, it's Chris Pulver, it's Iwin. So it's a bunch of professional traders at your disposal. There's a link in the description, and use the code Marco to get 25% off. Marco, do you have infinite accounts? I'm not sure what you mean by infinite accounts. So if you can elaborate a bit more. Let's see. Let's go a bit higher in the comments. Bank of England cannot hike. Traders will price in another hike. Starts a war and his GDP booms and his currency strengthens while others get hammered. Bank of England Megan Green speech. Marco, I read that if the shock persists in 3 weeks, Europe's tourism flights would be affected due to missing kerosene. Possibly. But the current pricing does not really fit what all of the analysts are saying. Oil seems to be really going lower. Did we get any news? I don't think so. Let's take a look at the breaking news. Yeah, I don't see much. Anyway, so you're just not getting what all of the analysts are saying. Most of the analysts are super bullish on oil. They're saying the disruption in the strait is one of the worst disruptions in the last few decades, which is a pretty bold statement, but the price doesn't seem to care. So the price is always right, and currently it doesn't seem to care. But kerosene is a different type of fuel. I'm not sure where it's coming from, and I'm not sure how it's produced, so that may be a whole different thing. I decided to stay away from USD CAD basket. Short yen is kind of working. I'm sad he didn't tell us to buy this time. So if you remember during the tariffs, if you were trading the tariffs, Trump made a post on Truth Social that this is a good time to buy stocks, of course. And then a bit later, he announced Liberation Day. No, not Liberation Day, but he announced a 90-day pause on tariffs, and that was the exact market bottom. So if you listened to Trump, you would have made some pretty decent gains. I'm going to show you. So the exact bottom was right here. And I think he put out the post about buying stocks right on the 7th of April or maybe on the 8th of April. So that was a great signal to buy. He didn't do the exact same thing this time, which is pretty unfortunate. I would have followed it 100%, but I think we have found our bottom. My conclusion from all of this, markets got tired of the war. The markets, they don't tend to cling onto a specific narrative for too long. So the markets get bored because the markets are full of people, and people get bored easily. I think most of you are kind of bored trading around the whole conflict and being risk off one day, risk off the other day. So market is a bunch of people. People get bored pretty easily, pretty quickly, and they move on to a new narrative. Now, the job of a trader is to find out what the new narrative is. It could be back to artificial intelligence. There's usually a rotation of narratives. One day it's artificial intelligence, then it's COVID, then it's the 2008 crisis, then it's Russia and Ukraine, then it's US and Iran, then it's US debt, then it's the devaluation of the dollar, then it's central banks hiking or central banks cutting rates. There's a clear rotation of narratives. And the next one, as I mentioned, may be back to artificial intelligence. I hope it is, because that is pretty easy to trade. You just buy stocks on pullbacks. You buy the NAS on pullbacks. And that's pretty simple. Pretty simple, pretty easy, much easier than the current market environment. Okay. So Cycling Club says the number of accounts you're giving away. So the A1 team gets a few accounts per month from DNA to give away. So every single month I do get a couple of accounts to give away. It's not infinite, but I can do one giveaway per stream. Kerosene is produced by refining crude oil. Okay, cool. But does it come from a specific region? Does only one region refine it or produce it? That's something that we need to, that's the question, And is that region getting enough oil to produce kerosene? Why should there be a kerosene shortage? That's the main question. I'm going to sleep. Good night. Well, good night, Mihafit. I hope you prepare yourself for the next day of trading. Let me just check if we have someone coming on after me. So if I go to the schedule, nope, I'm the last guy. Okay. I covered oil. I covered the Nikkei. Gold. What do we need to mention for gold? I'm looking for buy setups. I want to get in. I think gold has found a bottom. Still neutral on top setups, which is problematic. I'm waiting for a bullish reading, bullish bias on the Edgefinder, and then it would be game on for me to look for buy setups. So that is my game plan as far as gold goes. I like it. I think gold will follow stocks. So as stocks keep going up, gold should do a similar thing. We hit the 200 EMA on the daily. We bounced off of it, left a huge wick. There's not a lot of sellers left. Markets seem to be holding up. So I want to get in. I want to buy it. One last thing I'm going to explain. Before I wrap the stream up. Why do I prefer buying the Nikkei instead of the S&P? Well, let me just see, how is the S&P doing? Is the SPX? Yeah, so neutral here. Nikkei is bullish. The government in Japan, super dovish. Tax cuts are coming. Capital is flowing back into Japan. Nikkei has been outperforming the S&P for a while now. So there's many different reasons why I prefer the Nikkei over the S&P. So that's about it from me. I wish you a great week in the markets. Looks like it's time to flip to risk on. Let's get some confirmations on that, and let's get some pullbacks as well. So you can catch me tomorrow. I'll be doing another DNA Fund giveaway, and that's it. So goodbye. See you tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.